in listen-only mode.
Good morning, everybody. Welcome to this Fortnightly Market Outlook webinar. I'm joined by my two colleagues, Subash and Ajit. Good morning, Subash.
Good morning, everyone.
How are you doing, Ajit?
I'm doing good, sir. How are you?
Okay. So let's jump straight into the content. We have a full webinar lined up. First, I'll speak about the global markets and how various sectors have done. I'll share some data on US elections, and then we'll also see some international asset classes. Then I'll hand it over to Subash. Subash will share his view from technical charts perspective. And then finally, Ajit will come in and he will share his insights from derivatives. So without further ado, let me start. Is my screen visible?
Yes, Yes, sir. visible.
Okay, great. So as you can see on the screen, the yeah. So as you can see on the screen, um, international markets like Dow, S&P, Nasdaq have done well over the last fortnight, and many of the other parts of the Asia, like China, are still struggling to go up. While Indian market, along with the China, we have been in a correction mode, sideways range-bound market. The Dow has taken a lead, and they are again close to their either at the new all-time highs or at the close to new all-time highs. Japan market is surging on back of strong monetary policy there. For a month, if we see, most of the markets have been in the correction mode. Same is the case with the India. Now, within this range-bound market, obviously there are some sectors which have done well, while others have struggled. PSU, metal, power, these sectors have been struggling, while IT and realty has given some support over the last fortnight. For the last 1 month, we can see that the healthcare and IT are the outperformer, while metal, real estate, PSU have underperformed. So PSUs, especially railway and defense stocks, are the worst performer. And if you have been following our advice, we have been very skeptical on railway stocks, on defense stocks. Here in the newspaper today, we have seen that many of the defense stocks have corrected about 30 to 15% from their recent highs, uh, from their 52-week highs. So the story here is that the overvaluation was there and it is being corrected. Many defense stocks have a good long-term outlook. They are likely to rebound after a certain correction, but many may correct up to 30, 40%. Many may correct up to 50% before rebounding. So these stocks have corrected as we feared, and there is a possibility of further correction. But at lower level, we will look to add these defense stocks as the future is bright for them. Now, global markets, as I've suggested, has been struggling, and the reason why they have been struggling is because the carry currency, the currency where global hedge funds and global fund managers borrow, is the yen, and yen has started appreciating quite aggressively. From levels above 162, the yen corrected and appreciated up to 145, and now it is trading near 148. Now, if you see the clear correlation between the yen movement and the MSCI World Index, as yen depreciate, global market goes up. If yen appreciate, global market comes down. And now, for the last 1 or 2 weeks, it has seen some kind of a depreciation, and that's why we have seen some kind of appreciation in global market as well. But this is the one important factor to be watched for the rest of the year, how yen performs. Second important event which is scheduled this year is the US elections. And as we know, Joe Biden, around 22nd of July, he has announced his withdrawal from the presidential race, and he has nominated Kamala Harris to become his Democratic Party's candidate. From that day, Kamala Harris is gradually gaining the or implied probability in the betting markets, while Trump's probability is coming lower and lower. Now, this is a very important event for the global markets. according to the person who will become the president of United States, they have a completely different policies towards China, towards immigration, towards other parts of the world, whether war will continue or not, whether there will be support for China's policies or not. All this will determine by the end of this year. So from here, mid-August to mid-January, all this event will drive the market. Why it is important? As you can see, more or less in where whoever is the president, US markets have been given between 12 to 15% kind of a return. Only in Bush second term there was a negative return. But if you see the candidate, different sectors perform quite differently while US president is of a different party. So whenever there is a Republican candidate, usually they prefer technology stocks. Whereas there is a Democrat, they support the other consumptionary other sectors. So we have to see who is going to become the president of United States, and that will have a implication for our markets. Uncertainty is there, and that's why we have seen and we have been recommending gold has now touched a new all-time high. And in fact, I wanted to show these charts to you. So this is the gold future chart, and as you can see, it has now breached the all-time high. And whenever there is uncertainty and where central banks around the world have stepped up their purchases because of the Ukraine-Russia war, US government freezed Russian assets, and that scared many global central bankers. They are afraid to keep more and more money into US dollar, and that's why they have been purchasing, especially China has been purchasing a lot of gold from the market, and that's why gold is doing well and it is likely to continue to do well. Other asset which is also considered a replacement of this gold is Bitcoin, and it, as you can see, it has not been able to breach the all-time high. The high it made in 2024 March, it is not able to surpass it. That's why it is struggling. Another stocks which have been trading favorites are not doing that well. This is the chart of Tesla. It has not been able to go past the earlier highs, while something like Nvidia Corporation has been performing quite decently, and it has rebounded quite sharply from odds of 90 to again 125. And this is the reason why technology stocks are doing that well there. So technology is in focus in US. Technology stocks are doing well, some of the stocks, and that's why Nasdaq is doing better. Now back to our markets. So we are stuck in a small range, and we are struggling to go past the recent gaps. Markets are range bound. What sectors and how they are placed technically, I'll invite my colleague Subash to take this forward. Over to you, Subash.
Yeah, thank you, Devarsh bhai. Am I audible? And is my screen visible?
Yes, you are audible. The screen needs to be on the full presentation mode. Yes, go ahead.
Yeah. Now, yeah. Yeah. So good morning, everyone. So I'll be giving a brief technical view on the market. It was a largely a range bound week. Nifty was trading in an 8-day trading range, and it broke out of that range on Friday. As you can see on this daily chart, it was in a range, and the 50-day simple moving average was supporting the Nifty. And on Friday, it has closed above this range and also closed above the 20-day SMA. 14-day RSI also is climbing higher. It has crossed its 9-day EMA, and currently the RSI is around 55. So it is not overbought, which suggests that there is more potential on the upside. Now we have a gap area in the in the near term, in the immediate area. So it needs to fill up that gap area, and once it crosses the gap area, then the Nifty can head back towards the lifetime highs. On the weekly chart, we remain in a strong intermediate uptrend. Both the 20 and 50-week simple moving average are still rising, which indicates that intermediate trend is still up, and there is no sign of any reversal. Coming to the sectors, we ended with a mixed bag this week. Top gainers were IT, realty, and auto indices, and the top losers were PSU banks, media, CPSC, and also the PSC indices. Now, if we look at the charts of the sectoral indices, we can see that they have bounced back after some recent weakness. In particular, we like the Bank Nifty, Auto, FMCG, and IT indices. So you can see the Bank Nifty daily chart here. It has bounced back on Friday after making a double bottom. And also RSI has crossed its 9-day EMA and it's not overbought. It's still near the oversold level. So this is suggesting that there is potential for more upsides in the coming days. Auto was also trading in a narrow range, and on Friday it broke out of that range and also closed above the 20-day and 50-day SMA. RSI again is not overbought. IT has been outperforming of late, and on Friday it broke out of the recent range and closed well above the moving averages. PSU Bank Index remains in a downtrend, so this is a sector which can be avoided. And even metal index is also in a downtrend. So PSU banks and metals we feel can be avoided for the near term. Coming to the outlook, Nifty has bounced back sharply from the 24,200 levels, and it has also broken out of the recent trading range and closed above the 20-day SMA. So technically, this is suggesting that there is more probability of the markets moving up, and Nifty could now attempt to fill the immediate gap area of 24,350 to 24,687. A close above this gap area could lead to the Nifty targeting the life highs of 25,079. Given that most of the sectoral indices have turned around and broad market indices like mid cap and small cap too are moving higher, we feel that there are more chances of the Nifty moving up in the coming days. Crucial supports are at 24.2 to 24.1, where we have the 50-day SMA. If you look at the mid-cap index daily chart, we can see on Friday it has bounced back quite sharply and also closed above the recent trading range. So our conclusion is that markets remain in a short-term and intermediate uptrend, and we feel that Nifty could test the current life highs of 25,079 once it fills the immediate gap area of 24,350 to 24,687. Mid-cap and small-cap indices have shrugged off their recent weakness and started moving higher. Combined with the fact that most of the sectoral indices are in uptrend, the odds seem higher for further upsides. Crucial supports to watch for a short-term trend reversal are at 24,200 to 24,100. These levels coincide with the recent swing lows and also the 50-day SMA. So they are crucial supports for a trend reversal. Now that's all from my side. Now over to Ajit for the derivative view.
Thank you very much. Can you is my screen visible?
Yeah, it's visible.
Yes. So thank you, Subash, for good insight about the technicals. So now let's dig deep into the derivative perspective, because when we combine the technical and derivative perspective, we get a broader idea, and it also helps us to take a short-term kind of a trade and gives us a direction where Nifty and Bank Nifty and other sectors are heading. So that is why the derivative data helps us a lot in understanding where the market is heading in the coming weeks. So if we look at if we saw we have seen the chart of Nifty where we have seen consecutive 2 weeks of fall, and after that this week market has rebounded from the important moving averages. So there is one important concept in Dow theory that if there is a short-term correction in the market, it is short-lived from 3 days to 3 weeks. That is what exactly it has happened. We have been correcting from last 2 weeks, and now this was the third week where market has gained its momentum. And there was a gap on a weekly chart. So market on Friday, what it did was it after creating a narrow range bound session, and there was a good amount of supply at 24,400 level. So when the supply has been tested multiple times, it becomes weak because many of the sell orders it gets accumulated and consumed by the buyers. And after that, we saw a good momentum on Friday. Market rose up almost 400 points. So this suggests that hurdle is now has been taken place, and again it will resume its uptrend. So we will go step by step. Now we have seen that market has taken out 24,400 level. So what we can expect in coming week, we'll see from throughout this session. So what we have seen is short covering in the Nifty, and in Friday in Bank Nifty we have seen long build up. So this is a very good indication that the whatever fall we have seen, that will take a pause now, and we can resume our uptrend. To combine with the market trend, there is a put writing which has happened at 24,200 and 24,400 level. We can easily see from this chart, and it is a very this gives a very helpful information because we can see the open interest built up at various levels. So with the help of this level, we can just understand where market will take exactly the support, because whenever we are in uptrend, we have to focus more on the support because all the resistance will be taken out easily. The main hurdle was 24,400, which we have taken out. Now we have to focus on the support. The support lies in 24,400 and 24,200 key level. So unless and until we breach 24,200 level, we need not worry about the market direction, because it's now again moved into a primary uptrend market. So now the next resistance comes to around 24,800 and 25,000 level. So next hurdle, a small hurdle, will be at near about 24,800, and once we surpasses that, we can easily see that market testing 25,000 level. And if we combine the open interest by the FIs, the FI long to short ratio, and because they are considered as one of the smart money in the market, so on Friday they have done a long build up. So they have bought 2,323 worth, with contracts going up by 2,238 contract. So this is a good indication, and also we can see there was a long build up in the stock future segment. So entire week they have done a long build up in the stock future segment. So when index and stock both we can see a long build up, then it increases the chances of market heading higher. And if we look at it, the FI's long to short ratio, they have gone below one, but on Friday they have again moved above one. So this is a positive indication. Like they have now they will unwind their short position, and they will again start building up their long position. And so the outlook for the market is we have to hold the Nifty with a stop loss of 24,200 level, because we have seen short covering in Nifty. Put writing has taken place at 24,200 level and 24,400 level. So combining these evidence, what we can do, we can place a stop loss of 24,200 level, and a target of about 24,800 to 25,000 level. Once the 25,000 is taken out, so we can see a further short covering, which can take market up to new life highs, and we can see the next psychological level of 25,500 level. So till that, we have to keep in mind of 24,800 and 25,000 level on the higher side. Now coming to the Bank Nifty, there also we have seen a long build up for the entire week. So 49,500, I know it's very far, but we have to keep that stop loss because there is a big formation on a lower time frame. So that it indicates there was a huge demand at those zones. So that becomes a very important stop loss for Bank Nifty. On the higher side, we can see 51,000 and 51,500. That is going to be a hurdle. Because since it is a little bit underperforming the Nifty, so resistance will play a small role, major role over here. So once that 51,500 is taken out, then we can see a huge rally in Bank Nifty as well, because then there will be a short covering coming into the market. And if we look at sector wise, capital goods and IT. This capital goods and IT, they have seen a good short covering, and that is same witness in our Friday session where IT outperform extremely when compared to Nifty. So we can focus on this sector for a long position. And if we look at the sector stocks which is in the ban period, now it is the highest number. 17 stocks now is it is in ban period. So we have to keep in mind that we may not take position in these 17 stock on Monday. So we have to keep that in mind. Thank you, everyone. Over to you, Devarsh.
Okay. So as Ajit pointed out, we are headed higher, and there are good opportunities in the some sectors, but as shown in the banned stocks chart, lot of stocks are in ban, and that shows that concentrated positions are there in some derivative stocks. So we have to be careful from the derivatives perspective. Mid cap and small cap, as Subash pointed out, are looking better than the larger cap stocks. Now we are open for questions. If you have any questions, depending upon the screen you are using, press the question mark button. There will be window opening. On that window, you can type in your question, when we'll try to answer as many as possible. We have about 3 to 4 minutes to spend. So by the time the question queue assembles, let me ask one question each to both of you. So sectorally, Ajit, which sectors have seen the maximum long build-up and short build-up, and if you can spend a minute there?
Yes, sir. Sir, IT sector has seen a good amount of short covering on Friday. So IT would be an interesting sector to watch for. And if we want to look from a short build-up perspective, so the huge short build-up was seen in the chemical space and also in a fertilizer space. So if there is a chance of short covering, this sector could also lead the FNO space because there was a huge short build up in those space.
Right. Stocks like RT, which fell quite heavily, and that affected sentiment in the chemical sector. So, Subhash, uh, from technicals perspective, any sector which is looking very strong on charts?
Yeah, IT is the strongest, and followed by Bank Nifty and Fin Nifty. Bank Nifty has made a double bottom pattern on the daily chart, so it is looking good. And also, Realty and Auto are also looking good. Auto has broken out of a range and closed above the moving averages, so it's looking good for the near term. Similar pattern is seen in Realty.
Okay. So whatever we are covering will also be part of our weekly reports, which we'll be going to issuing. Ninad M is asking where can we find these reports. So this content which we are sharing will be also available on the YouTube. You can go there and see the webinar. Apart from that, weekly files will be available on periodic reports on our website and on the research section on our various mobile platforms. If you want, you can also get in touch with your customer relationship manager or our centralized desk, and they'll be more than happy to help you with this. So Jayesh Parekh had a query about OFS. So you please write it to us, and I will try to send this query to our projects team, where OFS of Hindustan Zinc was not visible in one of the trading apps. The Invest Right is the new app. If we haven't downloaded, many of you, please start using that. Pratik Sharma is asking about hospitality and tourism is doing good this weekend. Why stocks are down? So I want to explain to you that the stock market is a discounting mechanism. If festival season is coming and if companies are going to do well 3 to 6 months down the line, there are industry experts, investors who anticipate such moves and try to position their portfolios in anticipation of such moves. So usually market discounts 3 to 6 months in advance, and you have to be nimble enough to position yourself as the event happens. They will be only post event. If it is not as per the market expectation, then only there will be a reaction. And I'll give you an example. Right now, many people are trying to figure out what will be the outcome of US presidential election. We are in the mid-August. The election results will come by end of the November, December is the time where the clarity will come. Now market will start discounting who is going to be the US president and start building positions in those sectors. When the actual event happens, if you start buying post that event, you may not make money in the short term. While many people who have already anticipated this event correctly will be able to profit from it. So be always aware that the markets are discounting mechanism and they try to discount even 3 to 6 months in advance. PSU stocks, Prasad Mall is asking. So PSU banks are looking quite attractive, while engineering and defense stocks are looking little weak. They are also up for a rebound. As I have mentioned in the presentation, many defense stocks are down by 30 to 15%. So there could be some pullback there. We won't be able to answer any individual stock specific question. Jayesh Parekh is asking about Yes Bank, and Ashish is asking about Tata Steel futures. These are individual stock specific questions. We won't be able to answer. Neither will be able to answer on. There is a corporate action possible in Yes Bank. Yes, so there could be some announcement. Watch out for that. Pharmaceutical stocks have taken a lead. Ashish Banerjee is asking, yes, one sector where while markets were correcting, took a lead, and when the index went to the Nifty Pharma went to all-time high, that is a leader. And as we are going into this end of the year, I feel pharma stocks can take a lead. So be very, we are bullish on the overall pharmaceutical sector. So Jayesh Parekh is asking, Fed rate cut will impact negative due to the inverse relation with the carry trade. Yes, there is a possibility, especially after the first interest rate cut and the second interest rate cut. If we were to study the history, many times markets do start correcting for a longer term after the first interest rate correction cut. So be careful in the, because first interest rate cut is usually after the control over the inflation. If inflation is down and if economy has cooled off, central banks do cut interest rate. But the second, third interest rate cut are usually on back of low growth and fears of recession. And if there is low growth and fears of recession, corporate earnings take a dip, and that's why markets also correct. Regarding OI shown in the option chain on NSE site is different than the option chain on HDFC Sky Health. Dilip Desai is asking. So please send a screenshot, and Ajit and our colleagues will take a look at it and try to solve your question. New age company Ravi Gupta is asking. So many new age companies have started have their paths to profitability clear in terms of them. So if companies into investing phase, then they are burning money. Investors may not invest in it, the secondary market investor or the stock market investors. But when it becomes clear that 1 year down the line or 2 years down the line, because of these businesses, this company will become profitable, that is the ideal time to invest in new age companies. All right, I think we have answered most of the questions. Metal, railways and metals. So metals are dependent on Pranali Panse is asking about metals and railways. So metal stocks are dependent on China. Chinese economy is very weak. They are trying to revive it, but they have not been successful till now. So be careful in metals. Railway stocks, I have a fantastic future. There is growth possible, but the valuation is very steep there, and they have gone through a multiple re-rating cycle. So be careful there. Okay. Last question is about the highest PE of Nifty. So Nifty is trading in Nifty EPS. If we look at the 25 and 26, we are the aggregate earning of Nifty companies are expected to be around 1,300 rupees per share for Nifty. So by FY26, if we give 20 kind of multiple, the upside by 26, that is March 25 to maybe June 25, we can see a high of around 26,000 or so. At the lower level, depending upon the circumstances, whether it is a US recession or whether it is earnings degrowth, we have seen markets fall as low as 15 times also. So be aware of that. Okay, Fed interest rate cuts are expected at the end of the September. So once Jayesh Paris is asking about the Fed rate cuts, by end of September and beginning of October, we should start expecting the interest rate cut. Okay. So to summarize, markets have a 3 weeks of consolidation. On Friday, we have closed stronger. There are immediate gap resistances, as Subash pointed out. Once we take out those immediate gap resistances, there is a possibility that we can move back to all-time highs. And IT, as Ajit pointed out, is looking stronger among the different sectors. That's what we wanted to share. I hope it has been useful. Thank you for joining. Thank you, Subash. Thank you, Ajit. And we'll end this webinar.
Thank you.
Have a great
Bye,
weekend.
everyone.